Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 50th COT report in 2013. And of course, as usual, we're going to start off with the changes in commercials positions. Here we go. Coffee, copper, dollar index. Let's start with coffee. We have a 27% change in commercials positions. 23 in large speculators. You can see the changes over here, larger than average. And we do see some greater changes in the past, trying to find the similar changes pointing in this direction. You can see a few indicating that these larger changes in this direction when, for instance, commercials decrease their net long positions rapidly, that usually affects prices. Opening a 5-year chart, let's have a look at the COT Extreme. Here we go. You can see that we're moving away from this great extreme level that we had a few weeks reports ago. This was definitely a bullish type COT Extreme, and as you can see, prices are climbing at the moment. Of course, big question, if you look at this last 1.5 years time range, commercials and of course large speculators were bouncing back and forth, moving in this sort of a channel. Question is, would commercials go back down to deep net short territories? As you can see over here, these would signal basically that prices can start their really great rally. Moving on to copper, we have a 23% change in commercial positions over there, much larger 31% change in large speculators. And as you can see, basically with this larger change, this move, commercials and large speculators are the only ones in net long territories. Basically only small speculators are taking the short side of the market. This in itself can be considered more of a bearish signal. If we look at a 5-year chart, let's open the 5-year chart and see everything on a wider perspective. Here you go. You can see that we had this great buy signal from the COT Extreme side, but we're moving very rapidly away from these levels. And of course, if we reach relative extremes, and we may talk about one actually sort of now, maybe we need to wait another or one or maybe even 2 reports. If of course we're going to be experiencing such large changes in traders' positions, we might actually reach a level that becomes more of an extreme pointing downwards. It's hard to tell whether we're there yet. Of course, relative extremes are more difficult to see. They're more visible after a few reports pass. One thing's for sure, a all-time or close to all-time extreme would push prices down if we'd reach, in commercials case, about 30,000-40,000 contracts net short. We're definitely there. We're definitely not there yet. They're still net long at the moment. So I believe this larger change may affect prices, pushing them a bit lower. But generally speaking, I would say this bullish extreme is still in place, and we may expect prices to continue this rally. Dollar index, our next market, with an 18% change in commercials positions and roughly the same change size in large speculators. You can see commercials just going above the zero line, becoming net long, while large speculators becoming net short. So that's interesting. Opening a 5-year chart, let's have a look at the extreme in the dollar index. Here we go. You can see that we are getting closer to one. Again, commercials being net long usually coincides with bottoms in prices. You can see these examples over here. The fact that they're again becoming net long suggests that we should be seeing a bit of a rally in the dollar index. Moving on to large speculators COT Extreme. Here we go. Cocoa is on top of our list. We've got all-time COT Extremes in commercials and large speculators. So let's open the 5-year chart right away and see this extreme on a wider time scale. Here we go. You can see this great extreme in this market. Of course, we've been talking about the cocoa market in the last few reviews now, and it's actually quite obvious that this is a very bearish signal that we have right now. if we go back in time and have a look at these large extremes that we had in cocoa market, you can see that they usually signaled well these tops in the market. So we're expecting that to happen. Of course, it's difficult to tell whether it's going to be this week, or we may need to wait a few more weeks, but we're not that far, I believe, if we look at this extreme. So that's an interesting market, but let's move on and have a look at the soybeans, where we only have a 57-week report extreme, and that's, well, it's not that large. Of course, doesn't mean that we shouldn't have a look at it. There may be an extreme being developed right now. If you look over here, you can see that we may talk about a relative one. The last time commercials were at such levels, at roughly 140,000 contracts net short, that coincided with this top over here. So this could be considered more of a bearish signal. On the other hand, we may look at it in another way. We had a relative bullish extreme over here, almost reaching net long territories for commercials. That started this rally. Of course, this level was breached already, or it depends how strict you look at this level. But one thing's for sure, we don't have an all-time or close to all-time extreme, which would be more obvious to decide what's the correct direction. I would say that this extreme over here can be considered a stronger one if we start moving away from this level, going back down to below 200,000 contracts net short in case of commercials, of course. Then we should be expecting a rally in prices. It's hard to tell which way they're going to move away. It may not be the best market to trade this week, I believe. But anyways, you should have your eyes on it. You can see that how well the COT report signals bottoms and tops in this market. I'm just showing you a few examples over here. Okay, S&P 400, our last market. Let's have a look at that. We have a 54 report extreme in large speculators positions. Here we go. And by the way, you have this huge 41% change in small speculators, which is definitely a larger one. We do see large changes though in small speculators positions over here. Let's open a 5-year chart and see an extreme on a wider time scale. Here we go. You can see that we're not at those great extreme levels yet. We've been there for quite some time without any price reaction, so that's interesting. And my expectation is that this rally may easily continue, and parallel to that, the extreme can widen even to bigger levels. Even we may see another all-time COT extreme in the S&P 400, and of course in other indexes, before we really reach a top. It's up to you to decide, though. It's my opinion and what I see from the report. But that is going to be all for this week. If you would like to have a look at other COT charts, then check out our COT charts page. And of course, if you would like to have a more in-depth and detailed COT analysis, as I always tell you, I advise you to check out our service, and where you can add really great functions to our table, other useful tools like the long-term trend, volume and open interest scores, or the COT index maybe. Of course, you can look at new COT report types, data types, and do your research and look at old reports as well. So I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.